Good evening, happy Monday, and welcome everybody. Time to get it in. April 15th, tax deadline. Grabbing a sip of water real quick, guys. Get started in just 1 minute. All right, let's go. Guys, I'm hoping you're doing well this week. Happy Monday. It's halfway through the month of April. Tax deadline. I know that a lot of you are probably scrambling to make sure that your taxes are complete this year for 2023. Some of you are filing extensions. I know we're doing a lot of extension filing right now too. All right, so welcome. Hopefully you're having a great week, having a great year so far, doing well inside of your trucking company. I'm excited to be with you today. I'm excited to be with you every single Monday. And let's get into it, guys, real quick. I just want to go over this in the beginning. This is us, By the Books Consulting. I'm the founder, senior consultant, CFO, tax strategist, your accounting superhero, Cheston Bulgin. This is how you reach us. Our company is 888-4BTB now. That's 888-428-2669. You can reach us on the web at bythebooksconsultants.com or at youraccountingsuperhero.com. You can also reach me at email on this email address, Cheston at bythebooksconsultants.com. And peace of mind, guys. We talk about this. The big deal here is to make sure you have your systems and structures in place so that you're profitable. You get to keep that profit, and that you don't get in trouble with people like these government agencies. And then, like, I really love high-level strategies that you're able to execute inside of your business. We like to work with you guys in that area. So that's basically what we do, what we're here for. And you're in this conversation with me because you want next level results. That's most likely why you're here. You're looking to get that information on how you can make more money, keep more money, and make it easy. Okay, so one of the things we're going to talk about today in this conversation is going to be, tax strategy. Okay, but we're going to get through this disclaimer real quick first before we get into it. The disclaimer is the following is for educational purposes only. It is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. And let me just bring this down. So it's good to be with you guys today. Now, the thing that we're going to talk about has been on my mind because I've heard people in conversation. I've heard, business owners and experiencing some things where you get a tax strategy, right? You get a tax strategy from someone, and then it doesn't do anything for you. You pay all this money and you get a tax strategy, but you're still paying all this money in taxes. It's like, man, what was the point of all that? Well, how did this happen? I thought I was actually going to be able to save money, and all this is confusing. It's a headache. I don't have time to look into this myself. I really wanted to hire somebody to do this for me, somebody who knew what they were doing, and it just wasn't the case. And now you're frustrated because you're going out here working, busting your tail, and you're not able to keep the money that you make because you got to pay Uncle Sam. All right. So I don't want you to be in that situation. I really do want you to have results in every area that you work in inside of your business. So yeah, tax strategy doesn't work by itself alone, right? We're going to need to have a whole plan of execution behind that, okay? And a follow-up and follow-through behind that. If you have a good tax strategist, somebody you've been working with, somebody who you've been working with, if they're good, they'll help you move toward those next steps of execution as well. All right, and they won't just leave you hanging with a tax strategy. All right, so what am I talking about when I say tax strategy? I'm just assuming that the people in this conversation know what I mean. Well, it's tax strategy. It basically means that I'm going to come up with a way. Right, so I'm going to come up with a way. Let's just get this out here, guys. Okay, this basically means that I'm going to come up with a way to make sure that when I make money as a business owner, I get to keep it in my pocket. I'm going to come up with ways to do that. Right? That's going to be a strategy approach to being able to keep your hard-earned money. Okay. Now, a lot of people will talk about another thing called tax planning, which is also important. I know it's sexy, right? Anytime we talk about taxes, it's really sexy. My wife tells me that I get a little twinkle in my eye every time I talk about taxes. It's like, yes, yes, let's do some tax talk. But it's kind of cool, though. It's kind of cool that we have a strategy. I play chess, guys. I do. My name is Cheston, and I play chess. And the reason I play chess is because my brain works this way. It's like, man, I love to come up with strategies and then execute on strategies like in the moment, like how it applies out here. Like find that tactical movement, that tactical action that I can take right now and crush it and win the game, man. I love it. Right? This is no different to me than having a strategy in place and then being able to walk it out through a plan, right? A plan of execution to walk it out so that I win at the end of the day. Okay. And when things show up, I understand the tactics and actions right now that I can take to make sure that that strategy that I've chosen and the plan of execution that I've chosen actually works right now for me every single step of the way. Okay. So that's what I want to say about that. All right. So there's tax strategy, which is coming up with an approach to how to keep more money in your pocket. And there's tax planning, which is going out and having a plan of execution on that strategy. All right. And hopefully that makes sense what I'm talking about, because a lot of times you'll have one, not the other, and you'll be confused and you'll not know why you're not getting the results inside of this area that you really wanted to get. Right. And it's going to be like that whole high level understanding of what it is that you're doing. Now, tax strategy in and of itself, all right, there are some ways that we can come up with to keep money in your pocket at whatever level that you are in business. All right. So one of the main ways that people do this when we're getting started out and you're starting to make money is business structure. Okay. That's strategy. Business structure is a strategy. Now, if you haven't actually come up with a strategy for business structure, then you want to start looking at, well, what kind of strategy do I want to put in place when it comes to that? If I'm a small business, right, a small business owner. All right. Now, we're talking about you in the trucking industry because it's important for you to understand what structures are going to work the best for you. Okay. Now, I had a conversation with somebody, a couple of people, right? A couple of business owners. But today I had a conversation recently that was regarding this, which is interesting because I was going to talk about this tonight. And they said, hey, man, somebody came into our company last year and they gave us all this stuff, man. They told us to start these other companies, trucking company out in Texas. Said that these people came in and said, hey, we need to start these other companies. We got one company for the equipment. We want to put our equipment in one company and then lease it to the main operating company for the trucking company. And then they had another company for us to hold property in because they had some property. And then they did all this stuff, gave us these agreements, and then we didn't do anything with any of this stuff, right? And we paid all this money for these people to set it up. And at the end of the day, I know that you, as somebody who's running your fleet, running your trucking company, you really want somebody to come in and really put things in place so that it's working for you and you don't have to think about it anymore. And then at the end of the year, everything just works as according to what you thought it would be. All right. Now, let me say something about that. As a business owner, as somebody who's running their operation, you do want to have a general overview understanding of what it is that you're doing in any of these strategies. Okay. Because it'll save you a lot of time, a lot of money. This particular company, I know they're just coming around to file taxes and still they owe a lot of money in taxes, right? They didn't use any of those companies, so they didn't really do anything, right? And the main shifts that wanted to be in terms of, a holistic approach, they weren't taken, right? And when I say a holistic approach, it wasn't considering, what taxes, how they're going to be managed. The things that they got put in place were really dealing with more so asset protection, right? But not all the way, right? But they didn't know this. They didn't know what it is that you really want to do to get that holistic approach to it from the asset protection side and for the tax side. And you want to know this. You want to have this in place. You want to make sure that there is real intention behind each action you take. If it's not going to deliver a specific outcome or specific result, then you want to make sure that you either pull back or do everything that's wanted and needed to make sure that's going to deliver the result that you intend, right? So, and that's another story. Like if you don't have a real specific intention for what it is you're doing, then that's probably the root and why the things don't work, period. Okay. But anyway, they did all this stuff, paid all this money, and still now, fast forward, tax time, to do everything that was related to 2023, they're still suffering. They still have all this tax liability. They still have everything they need to pay. None of this stuff ever worked, and none of this stuff is moving forward the way they wanted to move it forward, right? Why? Because this right here, okay? All right, the strategy wasn't clear, and then there was no plan of execution. All right, all this was not put together. All right. So let's talk about it a little bit in detail about, how you as a fleet owner would want to put this together. Okay. Now, business structure. All right. It's number one thing in terms of strategy that we want to talk about. All right. Business structure. So what is business structure? Business structure is like what we have different types of entities that we can build out in the business, right? Not just the different type of entities, but who's going to be in those entities, right? And how we're going to actually formulate our meetings and everything that goes along with filing and everything like that with your structure, okay? But the main thing is business like entities, like sole proprietorship, partnerships. And we have S corps. And we have C corps. Then we have nonprofits. Then we have trusts. And there's so many other things that we can do here, guys, like structure-wise. But these are the main ones. The main ones are A through D when you're operating a company. All right. And if you're a trucking company, especially, it's going to be either A through D is where you are. And do you know what you are? Right. That's the other question. Do you know what you are? Now, you might have seen here that nowhere on this list do I have an LLC. Okay. You might see here that I don't have that on this list. All right. Because we're talking about tax strategy, and LLCs don't have anything to do with tax strategy. I'll say that again. We're talking about tax strategy, and LLCs have nothing to do with tax strategy. They are a disregarded entity, which means that the IRS doesn't look at it for any type of treatment. They actually look through it to see how it's structured underneath and then treat it accordingly. So if you have a single member LLC, well, it's going to say, okay, this is a sole proprietorship, letter A. That's how they'll see that. If they have multiple members in an LLC, well, they'll look at it and say, oh, well, that's a partnership. That's how they look at it. If nothing else was done to choose how you were going to be treated, right? In either of those cases. Now you can choose how you want to be treated with an LLC, which is why LLCs are pretty cool, because you don't have to be treated as anything but what you choose, right? You can say, okay, I just want to be treated as a partnership now. I want to be treated as an S corp. I want to be treated as a C corp, but I have an LLC for the overall protection asset entity. Okay. So which is the awesome thing about LLCs. They're flexible in that respect. Okay. But they're not anything when it comes to tax treatment. If we're going to talk about tax treatment, it's going to be one of these. All right. Now, if you have not chosen anything for yourself, if you don't even know what you are inside of your trucking company, then you want to start knowing these things. You want to start knowing what it is that you're structured as a company. It's going to make the difference when it comes to tax treatment. For example, if you're making money as a trucking company, it might not make sense to be a sole proprietorship. It may not make sense to be a partnership. All right. If you have people that are in that company as a partnership, for instance, if you have people in that trucking company that are actively involved, right? So if that's the case, we're dealing with something called self-employment tax. It's going to be taxed more in addition to federal income tax, right? So this is why you hear people talk about S corps. And I'm going into this strategy, and we're going to talk about just this one specific strategy today, guys. And then in the future, here's what we're going to do. We're going to talk about more of how these structures impact you tax-wise, and more strategies you can use to have a strategy in place tax-wise, so that you don't have to pay any more money than necessary when it comes to taxes. Hopefully, that's a cool thing you like about how you're going to operate in the future. Hopefully, you think that's cool, is what I want to say. All right, because I want to make sure you keep more of your money in your pocket. So here's the deal: S corps. We're going to talk about that a little bit and why people are so fanatical about S corps, and then how you can get into a trap with these S corps and it not really benefit you so much. Okay. The main thing with an S corp is that if you start making a significant or a decent amount of money inside of your company, let's say you're making about 35, 40,000 or more in your business, then you may want to consider being an S corp, because now you want to shield some of those profits from self-employment tax, which is the Social Security, Medicare tax that you would have to pay for the employee side and the employer side, which is why they call it self-employment tax, right? Now, if you think about this, when you get a paycheck, part of that paycheck, right, you'll see Social Security, tax, and you'll see Medicare tax. All right. But also you'll see at the top line is going to be federal income tax. Right. And then you're going to have state tax. Why am I saying this about a paycheck? All right, you're a business owner. You don't have paychecks, right? Some of you do. All right, we'll talk. We can get into that conversation at another time as well about how to pay yourself and what that looks like when you pay yourself a paycheck. But traditionally, if you're an employee and you receive a paycheck, you're going to see these on your stub for the withholdings, like the deductions, the payroll deductions. And if you don't have, so basically, let's just stay here with it. Basically, if you receive your paycheck, you'll see this amount here for Social Security and Medicare tax. And usually those amounts will be 12.4% for the social, 6.2% for your Social Security. And then you'll have 1.45% for your Medicare taxes. But that's half of what that tax is. Your employer pays the other half of that tax. And we'll look at that just momentarily to see how the numbers break down for you as a business owner. But if your employer has the other half, you have the one half. What happens when you are the employer and the employee? Well, you pay all of that, right, for your paycheck. Now, any type of income that you make when you provide like a service or you sell products, we consider that earned income. You're trading your services for money. We have to deal with this type of tax. Okay. Now, in order to not have to deal with this, we need to have a type of income mix strategy, which is what an S corp is. An S corp is like an income mix strategy. Okay, so part of that income is passive, which is not earned income, and then the other part of that income that you get from it is earned income, and that part that's earned income is what they call your officer salaries or reasonable wage. Okay, so when you have that as a case, you can reduce a lot of the taxes that you would have to pay if you did not have the S corp, income mix structure. Otherwise, all of that income would be subjected to this self-employment tax. In addition to the federal income tax, in addition to the state tax, you'd be subject to that as well. If you did not have an S corp, if you just had a sole proprietorship, all that income is subjected to self-employment tax. Whereas with an S corp, only what you pay yourself is subjected to that self-employment tax. Okay, so that's the main difference, right? That's one strategy that a lot of people want to use. Now, if we have the strategy, we want to have a plan of execution for the strategy in addition to it. All right, I'm hoping you're following me so far, right? We want to have the strategy, yes, and then we want to have the plan of execution, the tax planning. So, which means, okay, we have the structure now. We have the S corp structure. Then what's going to be the plan to use it? You can do some cool things with this S corp, okay? One of the things we can do is make sure you make the wage that you pay yourself is compliant, but you're not paying yourself so much so that you're not getting the benefit of the structure. I had somebody that I was talking to, and they were paying themselves. They switched to an S corp, and they paid themselves like $300,000 on a paycheck. I was like, what? Why? Why would you do that? Right? Like the position doesn't even warrant you for getting paid that much, right? And why was I saying it that way? It's because, man, they just kind of defeated the purpose. They defeated the purpose of having the S corp. They're just overpaying in self-employment tax now because the wage is too high. But now they can actually pay themselves a reasonable wage, something like maybe $70,000, $80,000, which is reasonable for what the position warrants in their company. And the rest of that doesn't get subject to the self-employment tax. So basically, that translates to them paying between two owners, that's like $90,000 extra in taxes. It's like crazy, right? But they didn't know that. Now, the game changer is to not pay yourself that much and make sure that you're getting the full benefit of it through planning and execution. All right. So this is why we're having this conversation, because you want to execute on these strategies so that you keep the money in your pocket and not just have the strategy, right? And it do nothing for you. So let's take a look at like what the impact of this is really, and then we're going to wrap it up, guys. So let me just take this off. Let's just take a look. Here is like an example of somebody who's a sole proprietor and generated $100,000 in income. Net profits, right? This is not the top line. This is after all is said and done, after they made all their expenses, after they brought in the income, had all their expenses, what's left over is $100,000. Now you might say, okay, what if they pay themselves $50,000? It doesn't matter. All of that is like the $50,000, and the other $50,000 is still the $100,000 of earned income, which is going to get subjected to self-employment tax. And if you do have a sole proprietorship, technically you don't pay yourself a paycheck, okay? Because all the money is distribution or draw income for you, right? No paycheck is warranted for somebody who is a sole proprietor or somebody who's in a partnership, right? Partners are not employees of their company. Neither are owners of sole proprietorships. They're not employees of their company. They are the owners, and they don't get a paycheck. Technically, that's the approach, okay? But I've seen it where people will take a paycheck even though they have a sole proprietorship, and they'll have a partnership and they'll still have a paycheck, and it doesn't really serve, right? It actually causes more complications from them doing that. All right, so if you are in this scenario, you're a sole proprietor, you haven't really switched to anything else, but you're treated as a sole proprietor, you have $100,000 of earned income, this is how much tax you can expect to have if you are a head of household filer. Okay, $30,841 is what you can expect to, more or less, like a ballpark figure is what you can expect to have is a tax liability, right? Now, if you were paying quarterly taxes, you would pay that, like a chunk of that every single quarter, okay? Now, what if you switched the game, like you changed the game and switched it to an S corp? What if you did that, right? Well, you would pay yourself a reasonable wage. Let's say you pay that reasonable wage is going to be, instead of earned income being 100,000, you'll say the earned income is 40,000. And then you have the other is just the business income of the S corp, which is passive income to you. Well, you just saved just about $9,000 in taxes. Okay. Right. So that's pretty significant amount of savings when it comes to your taxes, right? You just saved $9,000 just by making the switch, which is 9% of your income, right? Almost 10% of your income that you actually were able to keep, more so, right? Just one small thing. You paid yourself a wage, $40,000, and then you were an S corp and you paid yourself a wage of $40,000. One thing. Like 1.5 things to be straight. Like, okay, you did switch to the S corp, but then you complied with the reasonable wage requirement and paid yourself $40,000. All right, but what if Here's another thing, strategy. Now that you're an S Corp, you can actually open up a 401k. Maybe you can start retirement and keep more of your money in retirement. Maybe you want to contribute the max, right? You take the max contribution that you can make as an individual, right? Which is going to be, let's say, the $40,000, right? Minus the max contribution, which will be deferred from your income. So we're going to take that away from your income. And look at that. There was another, $9,000 just saved. So just about $18,000. Two things, right? Now you have your money in retirement moving forward. You just made a max contribution there. But then maybe you decided that instead of just keeping all this here, the 60,000, maybe you just decided as a company to contribute just about what's 5%, right? 5% of the contribution that you made as an employee. Maybe you decided to contribute 0.5% of that, 0.5 times the 22.5. Let's say you did more than that. That's not a whole lot. Let's say you did 20% of that contribution, or 25%. Another 5,600, right? So now that takes away from the profit because now you're contributing that to the retirement, which is another deductible expense for your business, right? So if I take this and I subtract that contribution that the company makes in addition to what you made, which is a 56.25, right? You just dropped it down another 2,000. So you like $20,000 in taxes you can save. Just like a couple of things. That's just two things. You know, guys, there are like dozens of things we can do to strategize and plan for you to save money in taxes, right? And have your money in your pocket, move it from one pocket to the next pocket. So yeah, you might not have access to the money now in terms of retirement, like you put away for a later date, but guess what? That's your money that you get to keep, right? Moving it from your right pocket to your left pocket. And because of that, you save nearly $20,000 in taxes, right? Now, it may be the case that like a lot of like trucking companies at this stage that are profiting around $100,000, like they don't need every penny like to live on like day-to-day expenses. You can actually have a cost of living because you have 17.5, right, of a paycheck, and then you have another 54,000, right? 54,375 plus your 17.5. That's still 71,000 that you get to use to operate, minus your 11,900 in tax liability, right? 937. So it's still about $60,000 that you get to keep and operate with today, and then you have another amount, the 22.5, plus the like right around $30,000 that you put toward retirement this year. Okay, and because of it, you save $20,000 in taxes. Right. So this is what I want to bring to the conversation: is that strategy and execution, like strategy and planning. We want to execute on a strategy that we put in place so that we keep more of our hard-earned money in our pocket. Okay, which is fantastic. This is what you get to do. Okay. Now, this has been a great conversation to open up the floodgates to something maybe new for you in terms of understanding what the impact is of a strategic tax plan, right? The tax strategy and then the tax plan, right? Now, I want you to take this information and go back to whoever it is you're working with. Say, man, what can we do? Can you do this for me? If they're not doing it for you, and you see my number, we do it for you. All right. All right, guys. It's been great being with you. That's 7:30 on the dot Eastern time. We're done with this conversation. It's always a pleasure to be with you. Can't wait to talk to you next week about some new strategies. Let's go. Take care, guys. Bye-bye.